Hi guys, welcome to the Silver Report. Today is Wednesday, January 25th, 2017. Silver is currently trading at $17.02. Gold is down to $1,199.35. We have some stunning developments that are taking place, and we're going to discuss how this impacts you. The stock market, the Dow just hit 20,000 points. A lot of celebration, a lot of excitement, a lot of enthusiasm that is taking place, and we see there's been a drop. There's a couple of factors playing into this drop. Number one, the Chinese markets are going to be closed for a week. It's the Chinese New Year, and also coming up next week, we are heading into another Federal Reserve FOMC meeting, and we're going to have to see what comes about from this. But there is light at the end of the tunnel. Remember the words of Warren Buffett: be greedy when others are fearful. Be fearful when others are greedy. And because there's so much excitement and enthusiasm into this market, and it's misplaced, one of the biggest indicators, we are heading into a violent market correction. It is going to leave a lot of carnage in its wake. The stock market is extremely overvalued right now. In fact, it's so overvalued. The current market cap to GDP ratio is 127%. This has only been higher in recent history in 1999, before the dot-com bubble burst, and in 2015, late in the year. It was at 129.7%. Before the wrecking ball came through in 2008 and took the legs out from these massive banks, it was 108%. Another key metric is suggesting a seriously overvalued stock market. The cyclical adjusted price to earnings ratio is putting the S&P 500 overvalued by 75%. That means with a 10-year average around 16, on January 19, 2017, it was 28.06. Do you understand what that means? For every dollar a company makes, investors are willing to pay $28.06. For every dollar a company makes, investors are willing to pay $28.06. This ratio has never been higher, only twice. 2000 and 2007, and we know what happened then. The dot-com crash and the massive housing crisis and too big to fail bank collapse. This is a frenzy of greed combined with a little bit of insanity. And the talking heads, where are they with this story? Informing the public? Warning the public? No. They're covering Madonna's crusade for revolution. In fact, they're pumping the populace full of this enthusiasm into this $20,000 stock market. Not fair coverage, not explaining the dangers that we're heading into. This is the same kind of frenzy that took place right before the 1929 crash. This is what happens. People get excited, overvalued, and they start getting in this frenzy. It's just like that, like a drop of blood in the water near piranhas. Everybody thinks they're going to make gains, and it's not logical. You see, folks, they need instability. They need distraction. Think about it. They have illegal private server emails released into the public, and it is a felony for any government employee to use a private server. They must use their .gov email. This is what the whole scandal was about. It is illegal, and they all know this. And they have these emails released into the public. No, the story is Russia. Stocks and their values will come more into line, and for that, stocks will need to crash. And that's what they're doing, bringing the economy down. That's where we live, in a fake world where no one cares about facts. The fact is, things are not getting better. All that's left to anyone who will listen: prepare. Stocks are sky high. Great. Take your money to the sidelines. Sell now. It's a perfect opportunity. You couldn't ask for a better one. It's definitely very difficult to go and to sell your stocks when they're mediocre, but they're at sky-high levels. The Dow's at 20,000. Take your money, get it into the sidelines. I stake my life on metals. Metals will rule. But cash is better than the devastation of finding out your wealth is worth nothing, to finding out that when it's time to go and retire, you have no retirement fund, you have no pension left, because people attempting to profit off of your savings and your hard work have lost it all. And when it comes to the losses, they're not responsible. It's greed. And just remember that statement. When people are greedy, it's time to be fearful. When people have misplaced enthusiasm, and in all reality, it's not necessarily even people, it's machines who don't make sense. They work on algorithms, and they're following the frenzy. They're buying into the frenzy, and they sell into the frenzy. So all this can turn around very quickly. There's a number of different elements that could come in, dark horses that can come in and just take this entire balloon down. That's what it is, a bubble. It's inflated stock market prices, and there's a number of different events that could come and take this down. In fact, these people have amassed so much wealth that are controlling this economy, and they profit when things collapse. I mean, think about that statement again. Get greedy when people are fearful. So they profit from collapse. We see the money that was printed from the quantitative easing being siphoned into the same banks that caused the crash. And they get bailouts, they get taxpayer funds put into their company because they can't fail. They profit from the crash. They keep the profits, golden parachutes, massive commissions, and then they lose and they get money from our taxes. What about you? Who's going to protect you when they lose your money and their company begins to suffer because people want their money back? I mean, we're all responsible for our own problems. They have no responsibilities. They have nothing to fear. So it's wise to take practical steps to prepare now, to protect your assets by storable foods, by silver, by gold, especially when we're going to have this short-term price smash down coming. We know that it is inevitable for the stock market to come down. It's impossible for it to remain at these highs. And when they do, there's going to be a lot of fear, panic, and carnage. And with this, you need to make sure your position's right to be prepared for it. We're going to have a short-term smash down on the price of silver and gold while the demand for coins is still up. So it's good to go and take this time if you have money set away and buy now during this short little intermission. That way you have get stocked up, get prepared. All right, guys, thank you for joining me. If you like the content, be sure to subscribe. There'll be more information just like this. Like the videos, share the content, leave me a comment in the comment box. Any suggestions, anything that you've liked. I know we're in scary times right now, and things are tough. A lot of times people don't have a lot of excess money to go and spend, and I would not recommend that. I would not recommend going and selling your kid's college fund. But the excess money, because you're not going to profit from that. You're not going to profit in the short term in the silver market unless you have a $1 or $2 or $3 rise. In that case, you could in the short term, but really the investment in precious metals is about preservation of wealth. It's about a store of wealth. It's about keeping what you have. And so it's also a great way to save money, to go and to take some and put it away. Take it out of the fiat and put it away into something solid and stable that you hold in your hands as long as you can protect it. All right, but if you like the content, be sure to subscribe. There'll be more videos just like this. Leave me some suggestions. And we got something special coming up, so stay tuned, guys. Thank you for joining me.